Good morning, one and all, and welcome to this morning's video. So I hope that you had a great weekend, and I hope you are ready for this week ahead. I apologize in advance if there's a little bit of feedback on this recording. I have tried once again to find the root cause of the problem, but this strange and unexplained phenomenon just seems to keep occurring for some reason. But it is what it is. I've switched off as many electrical appliances which may be causing the interference as possible, but for some reason when I sound checked this, there was still a bit of feedback, so apologies for that. Anyway, I have three pairs on watch today, and those are Aussie dollar, sugar USD, and euro dollar. Just to say that I nearly placed a trade on soybean, and I'm going to touch on that to start with. So soybean, if you remember in last week's video, I was looking for, we had this 1, 2, 3 up here. We scooped up for an M style pattern, and I was looking for entries here to push to the downside. And sure enough, as soon as my entries nearly shape up but don't, I usually lose a YouTube subscriber, and that is usually people thinking, oh, this doesn't work, and then unsubscribing, or they got in too early, took a loss, and then they blame me, and then they unsubscribe. That's typically the mentality of people, which probably explains why many people think that the market is manipulating them, when if they actually analyze their trading in a little bit more detail, they would actually find that they're actually manipulating themselves. But that's a story for another day. But anyway, we had the tap into this, we had the impulsive push down, and then we had this structure here. Okay, so I was looking for entries once this candle closed and we were excuse me, in and around the high of the structure. I dropped down to the 15-minute chart, and I was looking for here. I was actually looking for, so we had this little 1, 2, 3, which is what I suggested might happen. And one of the reasons I suggested that might happen is because I said that when you have a structure like this, okay, and you have a near miss to the high, and you have this kind of structure, when the middle section is more impulsive than the move into it and the move out of it, what tends to happen is you tend to end up with a 1, 2, 3 structural approach. And that's exactly what happened, right? So let's take that off for a minute just to keep this. Okay, we don't want to delete the alert. Keep that clean. Okay, so we had the near miss to that high, and then we had that structural approach. Now, what I was looking for, this candle here, I was looking for this to close, to retrace 50% of the length of the candle, right? Okay, and then we would have closed back below there, and we would be back within this structure as well, right? Now, that didn't happen. And I'm pretty sure, and I wouldn't be surprised if the people unsubscribing to me on YouTube got in here too early. They saw this, even if they did understand what I was doing, they would have. A lot of people, when they see this before it's closed, they go, F it, I'm just going to get involved in case it goes without me. I've talked about that before, the market going without you. People think it owes them something, that the market's going without them. So they get in too early before the candle close, and then this happens, okay? So here's another prime example of FOMO, people not waiting for the candle to close, even if they did actually understand that that's what they were supposed to do. But because I'm patient, and I said to you that patience is probably my number one strong point where trading is concerned, okay, and in life, I always wait for the candle to close. It didn't close, and you can see people probably got washed out just through FOMO, just through impatience once again. Yet people still think that, it's a lack of technical knowledge, which is the reason they're not profitable. I would argue not. That's another example of not a lack of technical knowledge necessarily. That's a lack of patience. But anyway, just thought I'd give you that mini lesson. So just quickly. So what is this doing now? What is price doing now? Well, it could be forming another M style pattern where it pushes up to the high and pushes back down. However, at this moment in time, you can see price pulling back sharply. I wouldn't be surprised, okay, if price does something like this. Usually, if we get an M style pattern, there's a bit more of a gap, more of a scoop between there. So at this moment in time, I'm not necessarily seeing it as an M style pattern, okay, because I would anticipate It's usually when price gets very wide like that and then pushes up. Okay, it's not normally when we have a standard consolidation which looks proportionate to the move down. Okay, so at this moment in time, what I'm seeing this as, and of course things could change, I wouldn't be surprised if we come back down sharply and then we push up again, and then this becomes a 3-touch structure like that, where this becomes the middle section. Okay, so that's one of the reasons I haven't got this on watch today. Okay, and you can see it pulling back sharply already. Okay, because then because we have a near miss to that low, these lows near miss to there, we may tap into that. Okay, we then get that kind of structure, and then that acts as the middle section to push up to there. And that wouldn't surprise me, because if we just zoom out again, we did tap above here, but not by very much. Okay, we just kind of wick slightly above. It wouldn't surprise me if we break a bit higher before the move to the downside, but we'll see. Okay, I've got an alert up there in any case. So Aussie dollar, I don't think that any of these will be necessarily ready. Euro dollar maybe, but I don't necessarily think these will be ready, because it's actually a bank holiday here in the United Kingdom, and the London session starts in about 7 minutes time. It's actually a bank holiday in the United States as well, and the New York session typically starts, I believe it's 12 p.m. UK time. So we will not have the liquidity necessarily from those sessions. Okay, so I wouldn't be surprised. This is typically where price just trickles around until the market reopens, and you can actually see that in the price action of some of the pairs across the board. But because we don't necessarily know when the market is going to do what it's going to do, or even if it's going to do it at all, it's good to have some of these pairs on watch. Okay, so what I'll be looking for. Okay, so we have Aussie dollar requires a little bit of dissection. Okay, but we have this structure here where we have this breaks below there, but fails to tap into this area here. Okay, we scoot back round, we break below, catch people the wrong side of the market who believed this was going short. You can even see where many people thought this was that support became resistance, because they thought this was a retest to get short, and you could have made some profit in there. But as I said, you're capping your profits by constantly trading these so-called retests. Okay, so we then push to the upside. Okay, we break above here, but notice that we've moved down more correctively all in all than we moved up. And notice that the start of the move, it wasn't a series of impulses and corrections. We kind of consolidated our way down until there. Okay, so that's given me a clue, particularly when we have a near miss to this exchange of liquidity, which caused a big runoff, where there was enough of an exchange of liquidity to smash through that low. That gives me a clue that this is potentially a 1, 2, 3 to tap into that area that we near missed to, before either we consolidate sideways and push higher up to these areas to take out this high, which this high near missed to, or we push down from there, and then we would have that 1, 2, 3 touch structure. Okay, so that's how I'm seeing it at this moment in time. And if we just drill down to the 4-hour chart, we have a wick there. Does price have any business coming down to fill this wick? Well, yes, potentially, because if you look at this, you can see, what do we have? We have this 1, 2, potential 3 touch structure, and price has moved up more correctively than it moved down, suggesting a potential 1, 2, 3, which would take us down to this area to tap into this low, where there was enough of an exchange of liquidity to cause price to smash through all of these highs and through that high there. Okay, so there's likely a lot of liquidity there for that to have actually occurred in the first place. Let's get that off the chart, and that would be in alignment with what the DXY is doing at the minute. Okay, so if I just drill down again, so with that in mind, what are we looking for? Whoops, didn't mean to do that. What I will be looking for from this pair today is the following. I'll be looking for, as I say, I don't think this is going to be ready, but if it is, great. Okay, I'll be looking for a tap into this area of value where there was likely a lot of liquidity. Okay, and then I'll be waiting for a push back up above this area of value, followed by a 2-touch 15-minute continuation. So 6 to 8 corrective 50-minute candles. I won't be looking for a 5-minute. And the reason specifically, one of the reasons, is that a 5-minute consolidation could just be a temporary stall before we push down to here, because this low actually near missed there to some extent. Okay, so it would be much more risky. So by waiting for a little bit more of a consolidation, I'm mitigating some of the risk attached to this setup. And then what I would do is I would look to get long either on the break of the flag or within it, okay, with the risk entry within it. And then what I would do is I would have, next question I ask myself is, can I manage the trade? Yes, I could manage the trade up to that area, assuming we push down from here. And now for about 3%, to the top of the structure would be about 4.5%. And then what I would do in this instance is I would use the mechanical management tool, which would be the Fibonacci retracement, and I would measure from there to there. And what do you know? You've probably noticed if you watch my videos regularly that the 90% of a range, so that high, which this high near miss to, 90% of this range would fall bang on where that near miss was. Okay, so I would set a take profit at that 90% area. Okay, and I would trail my stop loss accordingly, and that would give you that would give me something in the region of 9.5% to work with. So very nice indeed. So we shall see what shapes up. Personally, I think this is going to take till tomorrow to shape up, if it shapes up at all, but we shall see. The market will show its hand, and then we can either execute or not execute accordingly. So that is Aussie dollar. Moving on to sugar USD. This is quite a simple one as well. Well, a bit more simple actually, but this is slightly lower down on the list just because of this sequence and just because it's lower into the run. Okay, so sugar USD, I was predicting this a long time ago, and it's manifested. So we have this, what do we have here? We have this high here, okay? And we have this, we have that high there that near missed to here, but this to some extent near missed to here. Now, to me, this high is more significant, and the reason it's more significant is because if you look at the sell-off here, okay, what occurred when we got to this low? We correctively broke it, right? Whereas with this high, not only was there a big amount of volume generated there, but this exchange of liquidity caused price to smash through this low. And it wasn't just any low, it was a sharp low, okay? It was a sharp move down followed by a sharp move up, suggesting that there was a lot of liquidity there. So if we have an exchange of liquidity here and a sharp sell-off that breaks through a sharp move, a sharp move down followed by a sharp move up, that there must be a hell of a lot of liquidity in this area. So I'm not surprised that when price was here, it broke above this high, but didn't respond to it in any way. It naturally went to the more attractive area of value, which was there for the reasons, likely for the reasons given. Okay, so we then tap into that area. Let's just get that one off the chart. There we go. We tap into the area, but how did we move down? Did we move down impulsively? No, we moved down more correctively than we moved up. Why did we move down more correctively than we moved up? Well, likely, given that the next high was all the way up here and up there, likely because either we were tapping into this one, but it's not very prevalent. You know, it's not necessarily one which I'd imagine people paying a huge amount of attention to, or likely because there was just still orders sat just above here that needed to be tagged for price to plummet to the downside. And you can see what happened. We did break just above there. We wicked to it. What happens when we wick to an area? We usually come back up and wick through it or break above, and then we move to the downside, and that's exactly what occurred. Okay, we then have this 50, just over 50% pullback. So we have the impulse correction continuation. This could have been an area of significance because if you look at all of this price action here, there was a sharp move down followed by a sharp move up. So I wouldn't have been surprised if, given how we fell, this was a 1, 2, 3 which tapped into that area to then push up to give us that kind of structure to tap into one of, like that high, for example, or one that high sat above, but we didn't get that. This is what I mean about the market showing its hand. What happened was we broke below here and we've consolidated underneath, which you can see as I drill down. You can see a consolidation sat underneath, suggesting there was not enough liquidity here to send price to the upside. Okay, you can see that price has left a footprint here. Okay, we usually gravitate back towards the footprint, particularly when they're the retest of the back end of something else, and a sharp move in particular. So then now we have that 1, 2, 3 I mentioned in last week's video. What do we have? Sharp move up, sharp move down. I mentioned that this would likely be the middle section that we may push up from there, or I said we may tap into one of these lows, and then we would have that kind of structure. Price would have found liquidity from one of those lows, which would likely send it to the upside to give us that. Okay, and at the moment, at least, that does appear to be what's happening. But of course, anything can happen in trading. But what I'm going to be looking for, and I'm going to have to speed up because I'm running out of time a little bit, but I'll be looking for a tap into here, a 1 hour impulse down, and then a 15-minute continuation, and then I would look to get short on the break or within the flag, and I would be able to manage it down to there for about 5.5%. Okay, and then I would be targeting that low down there, and I would use the mechanical management system, and we would have about 11 or 12% to work with to that low. So I have an alert set just below the area of value. If it does not trigger, then I'll not be looking to place a trade. So last up is euro dollar. Okay, this is partly lower down on the list just because of the sequence, just because of how we've moved up, and a few other variables which I probably won't have time to go into. But so we have this, we tapped into this high, but how have we fallen down correctively? Okay, but we've since had an impulsive move up. Okay, so we tapped into this low here. We had that low breaks below there, but it fails to tag that one. This one takes out all of these lows, taps into that, and then moves to the upside, although it moved up somewhat correctively, which is partly why this is lower down on the list. So as I drill down, you can see that we have a little consolidation there, which price has tapped into and responded to impulsively. Now, why did it respond to that? Well, likely because this area of consolidation was the retest of the back end of this. Okay, so it's an area of significance, and then we get this which breaks below there but doesn't tap into that area of value. We then wick to the area. What happens when we wick to it? We usually come back down to fill the area. We do fill the area, and now we've had that impulsive move up followed by a correction afterwards. Okay, so I'm seeing this now that we've tapped into this. We have that kind of structure, and the fact that we've retested the back end of that as a potential impulse correction continuation to push higher, which would give us this kind of structure. Okay, which would then tap into potentially this area where there was a sharp move. And what did that sharp move do? It smashed through that low there. Okay, so that's likely at this moment in time what price is doing. So with all of that in mind, what I'll be looking for, if we just drill down, you can see, okay, if you analyze this on the 15-minute chart, you can see this little base here, okay, which kind of retests the back end of this sharp move. And what do we have? We have the 1, 2, potential 3. Okay, but what we don't have yet is, if we just zoom back out, we don't have a kind of a base at the top. Okay, something like that, where we then come back down, where this would be a more developed structure. So what I'll be looking for with all of that in mind, and with a minute left of this video, what I'll be looking for is this. Okay, I'll be looking for a 3-touch 1 hour continuation, or a 2-touch 1 hour continuation with a 3-touch structural approach to the low, which we seem to be getting at the moment. And then I would look for a 15-minute risk entry within it as a minimum, and then I would be able to manage it up to this. I don't think this would hold much weight by then, but excuse me, I'll be able to manage it up to there for something in the region of 1.5%. And then I would be targeting, if I can move the screen, there we go, move the chart. I'll be targeting that high up there, okay, and that would give us something in the region of about 9% to work with, and I would mechanically manage that again using the mechanical management tool. So that is what I'm going to be looking for today, folks. I hope you've enjoyed this video. Have a great day, and I will see you again in the next video, which will likely be made tomorrow morning. Have a great day.